Okay, now that we have covered accounting standard 10, which is property, plant and equipment, here and there you have seen that if the asset is a qualifying asset, borrowing cost can be capitalized to the cost of the asset. We have studied that. Now, officially, we are now studying accounting standard 16. So, accounting standard 16 deals with borrowing costs. Now, first what we will do is, we'll take one small example, try to understand the entire core essence of this chapter. Once we understand that, officially we will see all the points that are covered. Pretty easy standard only, and it is not as lengthy as PPA standard also. It's like not even half of it. Okay, let's see. Now imagine, sir, there is a company. This fellow took a 10% loan of 1 lakh rupees, and this money is there here. What entry did they write? Bank account debit to loan. So money is there in the asset side, loan is there on the liability side. Now, this money he is now spending it for the purpose of construction of a building. Now, by the end of the year, construction work in progress. Building is under construction. On this building, this fellow already spent an amount of 60,000 rupees. Work is still incomplete. The remaining money is 40,000 rupees that is there in your bank account like that only. At the end of their position. Now, at the end of first year, you have to pay interest to the bank or not? What is the entry for interest paid to the bank? What entry will you write when you pay interest to the bank? So at the end of the year one, interest expense. See, whether you pay or not, you have to book the expenditure. No. So if you pay, it's to bank. Otherwise, it is payable. So to bank, 10,000. Normally, what do we remember is all the nominal accounts should be transferred to P&L account. Interest expense is also nominal amount, nominal account. This also should go to P&L account. But observe closely. If you transfer this to P&L account, see, every item of expenditure which you book in your P&L account is either directly or indirectly supposed to give you some benefit in the current year. Now I'll ask you, I took a loan. A loan money I used somewhere. Did that give me any benefit in the current year? What did you do with the loan money? You started constructing a building. Is the building completed? Is the building ready for usage in the current year? No. That means whatever money you have raised through borrowing, that money is spent somewhere, but it still did not start yielding any benefits as of now. Correct now? So that's the reason. If you book interest expense to P&L account like an expenditure, there is no benefit here, either directly or indirectly. When benefit is not there, if you go and book an interest expense in the P&L account, it becomes a loss. Correct? Where is loss? I never suffered a loss. I'm still constructing an asset. So what this standard says is, array, your asset is still under construction. Your borrowed money still did not start giving you benefits. So what you do, interest expense, instead of transferring it to P&L account, you add it to the cost of the asset. So my entry will be building WIP account debit to interest expense. 10,000, 10,000. The moment I write this entry, sir, here another 10,000 will get added. So building WIP is now appearing at 70,000 and P&L account nothing I will write. So this is the entries you write at the end of year 1. Sir, understand the logic why we are not throwing an expenditure to P&L account. What's the reason? I took a loan. On this loan, I have an expenditure, but that loan money is not used anywhere, which is giving benefit already in year 1. The loan money will become an asset, and the asset is not ready for usage. So this interest cost cannot come to P&L account over in year 1, sir. Now, let's come to balance sheet at the end of year 2. At the end of year 2, building WIP already 70,000 is there from first year. Another 40,000 also you spent off. So further expenditure on the asset is 40,000. So total money that is there in building account is 1,10,000. Now I am telling you that building is ready for use at end of year 2. Second year ending, last day only building got completed. Fine, let the building get completed. We are also happy only. Now, in this year also, second year also, I still have to pay interest. So I paid. Now, tell me, sir, second year interest, should I add it to the cost of their setup or should I put it in P&L account? First year we capitalized it. Second year, can I capitalize it or should I take it to P&L account? What do you feel? Obviously, when is the building completed? Year 2, last day. Interest expense belongs to which year? Throughout year 2. Throughout the second year, is the building available for usage? No. So that means building is still under construction throughout second year also. The asset is not capable of giving you any benefit. So charging this to P&L account is wrong. This also will capitalize. The moment you write this entry, another 10,000 also gets added. Now your asset is appearing at what value? 1,20,000. And now this is not WIP and all. This is a properly constructed building. Your loan is there like that only. Second year ending story. Now, come to third year. Your building is nicely appearing at 1,20,000. Your 10% loan is there, 1 lakh. Third year, this fellow paid interest. Interest expense account debit to bank with an amount of 10,000 and 10,000. This fellow says, sir, throughout third year, interest also I will capitalize. What do you feel? Right or wrong? If I go and capitalize this interest expense in the third year also, how is it looking? Right or wrong? Wrong. Why wrong? Throughout third year, building is used. Building is capable of giving you some benefit. That benefits are enjoyed by you. When benefits are enjoyed by you, the related cost also must be booked in P&L account. That is only matching concept. So since benefits are already being earned by the entity, the interest cost cannot go to asset anymore. Asset is ready for usage. The meaning is what, sir? Asset is completed. Once asset is completed, if you tell me, sir, this also will add it to the building cost. That means what? You are indirectly saying that building is incomplete. I'm still incurring cost on construction. Where is construction cost? Building is already bloody ready for usage. You cannot capitalize anything to the building cost once the building is ready. So then what will happen? Sir, where will it off to off as an expenditure in the P&L account? Now one fellow comes and tells me, sir, you are correct. Had I used the building, had I enjoyed some benefits, against benefit, the interest expense will be matched in P&L account. Perfect. But you know what, sir? Throughout third year, I never put the building to use. I never used the building at all. If I never use the building at all, my benefits derived from the building is 0. Therefore, I want to add it to the building. This is not acceptable. Reason, I don't care whether you use the building or not. What I'm interested is the building ready for usage or not? Is the building capable of giving the benefit it is supposed to give? Once the building is capable of giving the benefit it's supposed to give, you will stop adding interest to the cost of the building. Whether you did use or not is irrelevant for me. So for example, you say, sir, I did not use, sir. Okay, you did not use. Then why did you build? Why did you construct the building? Why are you paying interest? Sir, I thought I will use, but I did not use, sir. Fantastic. Then whatever interest you paid, this is loss. Let the loss die in P&L account. Expenses and incomes will be matched, not losses. Losses is no matching concept. Loss means loss, gone. You cannot add this to building cost. Are you getting it, sir? So it's not about whether you actually put to use or not. Whether it is ready for usage or not, you have to see. Are we understanding here? Now, coming to the formal statement of the standard. The standard says, borrowing costs that are attributable to three things: acquisition or construction or production of a qualifying asset is capitalized. See the wording, capitalized means an expenditure, instead of entering into P&L account, it will go into the balance sheet directly. Capitalized meaning indirectly is capital expenditure type. Interest, nominal account, it should go to P&L normally. But if these points are satisfied, then this interest, instead of coming to P&L account debit side, it will get added to the cost of the asset. You adding interest to the cost of the asset in the balance sheet, only we are calling it as capitalization of what? Borrowing cost. Okay, now here 2 points we have to define. What is that? One is, so first of all, what is the meaning of borrowing cost? At a plain outside, everybody understands borrowing cost is what? Cost of borrowing. What is the cost of borrowing? Interest. Interest is anyway borrowing cost. Some other small other items also can be there. We will discuss that. Next, qualifying asset. What is the meaning of qualifying asset? These two things, if you learn, then one by one is standard opens up, sir. Now let's see the first item first. Qualifying asset. The moment you hear about this term qualifying asset, in your mind what should come is, it's an asset which necessarily takes substantial period of time. For what, sir? To get ready for intended use or sale. For the ultimate usage, if the asset is taking a lot of time to get ready, or for getting the asset sold, it's taking a lot of time, then such asset is called as a qualifying asset. Now, so substantial period of time means what? Substantial period of time, what is substantial? Depends on facts and circumstances of each case. Sometimes 9 months period is also substantial. Sometimes 3 months period is also substantial. Sometimes 6 months period is also substantial. Sometimes 5 years period is substantial. It depends, sir. You cannot have a single timeline for that. It depends. Each case you decide. However, if unable to identify, then the standard says a period greater than 12 months is substantial. If the asset is taking more than 12 months to get ready for its intended usage or sale, then that asset becomes a qualifying asset. What is the advantage of becoming a qualifying asset? If you are classified as a qualifying asset, whatever interest cost on the borrowing is there, that interest cost, instead of throwing it to your P&L account, you will add it to the cost of the asset. So you will escape an expenditure in the P&L account. Are you understanding, sir? Now, sir, if I escape an expenditure in P&L account, my profit will rise. No, sir. I am happy. True. You are happy now, not forever. Why not forever? Look at the above example. First year you capitalize 10,000. Second year you capitalize another 10,000. Third year did you capitalize? No. You transfer the interest to P&L account. Now on this building you have to provide depreciation. No. When you provide depreciation, what will happen? Over the life of the building, the entire 1,20,000 will come to P&L account. In this 1,20,000 is included 20,000 rupees also. So whatever interest of first year, second year, you capitalize it to the building cost by escaping P&L account, that is not gonna stay in the balance sheet forever. That bloody amount also will come to P&L account with the name of depreciation. About depreciation. Are you understanding, sir? Right. Now come here. Sir, qualifying asset ki example is what? Sir, anything which is taking a lot of period of time. For example, you are doing a construction of building, which is going to take a lot of time. You are doing construction of a power plant. It is going to take a lot of time. You are constructing a dam. That's going to take a lot of time. So anything which is going to take substantial period of time, they are all qualifying assets. Now you may ask, sir, building you will construct and you will use. Power plant you will construct and you will use. Dam you will construct and you will use. Or you, all these are assets which are held for usage. But the definition says not only for usage purposes, even sale purposes are also covered. Which asset do we sell? Inventory. The asset which is held for sale in the ordinary course of business is what? Inventory. Or that means inventory also is qualifying asset as sir? Maybe. If it is taking substantial period of time. For example, you are a biscuit manufacturing company, sir. All the flour, the sugar, the flavor, everything you mix and keep. You press the button. Within 1 hour, packets are ready. It is taking substantial period of time. Huh? No. Example 2. You are making, you are a wine company. You are making a 20-year-old scotch. How many years will it take? 1 day. Huh? Not fake one, original. So original single malt whiskey you are making, sir, 20-year-old. How many years will it take? At least 20 years, no? So today you have to make all the mixture, leave it under predefined conditions and temperature over a period of 20 years. A natural fermentation process happens here and there between some additions you will do over a period of 20 years. It get ready. Ultimately, what will you do after 20 years? You will use it. Huh? No, we'll sell it. So inventory also can become a qualifying asset. You need not go to such a far-fetched example. A simple example I'll tell you. You are a real estate company builder, sir. You are. Okay. You are constructing 500 apartments community. It will take 3 years to complete. After completing, what will you do? You'll sell it off. No, you are going to stay in all the 500 houses, sir. You are going to sell them. So you are constructing a building for the purpose of sale in the ordinary course of business. For the buyer of the building, a building may be a PP, but not for you. For you, it's an inventory. It's as good as production of goods and selling it, construction of flat and selling it. So inventory also can become qualifying asset if it is taking substantial period of time. Clear, sir? Right. So this is about qualifying asset story. Next. So qualifying asset we have defined. Now what is borrowing cost? Borrowing cost means what? Now basic small points are, think like this. Borrowing cost means costs associated with borrowing of funds. Very simple English. What are the costs that is associated with borrowing of funds? Interest. So even though the borrowing cost term basically identifies interest, there can be so many other items which can also qualify as a cost of borrowing or borrowing cost according to the standard. Now, example of borrowing cost, let's try to understand with a small easy example. See, ma'am, you bought a borrowing. You got a borrowing from a bank account debit to loan, or you have raised a debenture. So let's say 100 lakhs. At the end of the year, you will pay interest. So you'll recognize interest expense. If you pay, you will pay. Otherwise, it would be a payable. Let's say some amount, 10 lakhs, 10 lakhs. This interest is a borrowing cost. Normally, this borrowing cost will be debited to P&L account. But now that we are incurring this borrowing in relation to qualifying asset, then we will capitalize it, right? So borrowing cost, a basic example is interest only. But look at another one. When I tried to raise a loan of 100 lakhs from the bank charged 1 lakh rupees processing fees, which I paid. So the entry for this is processing fees to bank. Let's say I paid 1 lakh, 1 lakh. Normally, the treatment of this kind of expenses is you will not charge it off to P&L account at once. Reason is, so you have taken loan. Let's say loan you have taken for a period of 5 years. So you will enjoy the benefit of the loan for a period of 5 years. Therefore, the processing fees also should be booked as expenditure in your P&L account over a period of 5 years. So generally, the treatment for this will be defer and amortize. What is the meaning of this is, every year out of this processing fees, some amount you will charge it to P&L account. Over a period of the loan, 5 years. So that will come as point to point to point to point to point. When you charge this to P&L account, the amount whatever is coming here, which is 0.2 lakhs or 20,000 rupees, this number is a borrowing cost for you. Not only interest. See, borrowing cost means what? Cost incurred for using a borrowing. Interest, not only interest. I also paid processing fees. Even that is also a borrowing cost. Next, another example you watch. I issued debentures at discount. So what is the entry we rate when debentures are issued at discount? Bank account debit 90. Discount on issue of debentures 10. So debentures issued at par 100. Now E10. Discount on issue of debentures, whatever is there. What is the treatment of that? Again, same. Debenture life is, let's say, 5 years. So every year interest cost will anyway come to P&L account. Apart from interest cost, this discount on issue also will be deferred and amortized to P&L account. So you forget about capitalization for a moment. P&L account debit to discount on issue of debentures. Now this portion is a borrowing cost. If you tell me you issued these debentures for the purpose of construction of qualifying asset, then this borrowing cost, I mean this discount on issue, which normally would have debited to P&L account, I will not debit to P&L account, I will add it to the cost of the asset basically. Next. Similarly, you issued debentures at par, but these debentures are redeemable at premium. Since they are redeemable at premium, you will also record premium on redemption, let's say 10. And this will debit to an account called as loss on issue of debentures. Sir, a 10 ka treatment is what? Again same, defer and amortize. So every year when you defer and amortize, a loss on issue, some portion will keep on hitting your P&L account. But if you tell me that these debentures are issued in relation to construction or production of a qualifying asset, then this one will be capitalized to the cost of qualifying asset. There are 3 points, sir. So what did I tell you? Interest cost, processing fees, amortization of discount or amortization of premium or redemption, these kind of things we have seen. Apart from this, so these 3 things are over for us. This is over. This is also over. Transaction cost treatment also we have seen. This is also over. Ancillary cost relating to borrowing. When we do leases chapter later on, still time is here. When we do leases chapter, I will take you through a case where you will get something called as finance charges. That is also one type of borrowing cost only that you will understand when you understand what is the meaning of a finance lease. AS 19 we will study that leases chapter. Once these 4 are over, next there is a beautiful case where when you make a foreign exchange borrowing, when you make a foreign currency borrowing, on that foreign currency borrowings, you might suffer an exchange loss. Because when I borrowed, dollar rate was 80. Today by my balance sheet date, dollar rate became 85. So if to repay this dollar back, I have to spend 85 rupees. 5 rupees is loss for me. Normally that loss will go to P&L account. But what the standard says is, out of that loss, some portion can be treated as borrowing cost. Now why, how, we will see now. So this one is a case of AS16 clubbed with AS11. AS11 is another standard which is based on foreign exchange effects of changes in foreign exchange rates. That's a separate standard. So this and that standard is a mixed point. But I'm not going to wait till AS11. We will finish this off right now itself. So yeah, before we go into that, you tell me small examples for this. Okay, I have written it here, but anyway. See, sir, borrowing cost incurred for acquisition, construction, and production of qualifying asset can be capitalized. Okay, now example of production of qualifying asset is inventory. An inventory is produced, and if it is taking substantial period of time, it can become a qualifying asset. We have already discussed that. Construction of qualifying asset, very easy example. You can take a building, you can take a factory, you can take a power plant, many examples, multiple examples can come. Now, what example can we give for acquisition of qualifying asset? Now, what is the meaning of the word acquisition? Acquisition means purchase. When you are saying that I am buying an asset, doesn't it mean that asset is already ready-made? And if it is so, ready-made, then how is it a qualifying asset? Because qualifying asset definition itself is it will take substantial period of time. So why did the standard use the word acquisition of qualifying asset? So for that, understand carefully. Suppose I took a 25 lakh loan and I purchased a Skoda car. Skoda car is a ready-made asset and that is ready for my intended usage also. So there is a borrowing, I'm incurring borrowing cost true, but what I purchase is not a qualifying asset. But another example you watch. I want a particular kind of machinery that's not available anywhere in India. So what I have done, I located a supplier in New York. The fellow is having this machine ready-made. What he said is, he'll dispatch the machinery only if I make him 100% payment in advance. So what did I do? I went to SBI, borrowed money 100 crores and I paid to him. That fellow dispatched that machinery. That machinery comes in parts, ready-made asset only, but for delivery purposes, they broke it into parts, different components, and they shipped it. By the time the ship reached India and it reached my location, it was 4 months. After that, it took 2 months time to get installed and get ready for my intended usage. So technically, if you observe, what I bought is a ready-made asset only, but it is not ready for my intended usage. It took 6 months time to make it ready for my intended usage after the payment has been made. Now, ready-made asset, but not ready for my intended usage. Therefore, it becomes a qualifying asset. Another example. I purchased a software. The software as such is not useful for my purposes. Unless I write some extra coding, I modify, I tweak the software so that it will be useful for my purposes. So when I bought the software by paying money, which is a borrowed fund in fact, a software was ready for usage only, but that's not ready for my intended usage. Again, I have to work on it. It took 8 months. After 8 months only, the asset became ready for usage. So this can be a qualifying asset. So everything that is ready-made purchased, you cannot outrightly say that it is a qualifying asset, it's a qualifying asset or it is not a qualifying asset. It all depends on how much time it is taking to get ready for the intended usage. Based on that, you have to judge. Okay, sir. Now, the last component of borrowing cost, which is exchange differences related to foreign exchange differences. What is this? We'll try to understand. See, guys, many entities, when they want money, instead of borrowing locally, they borrow money from foreign banks. The reason for borrowing from foreign banks is very simple, sir. If you borrow from foreign bank, interest rate will be lower. Sir, why foreign banks are giving lower interest rates? Simple, sir. Interest rate is always linked to inflation. In India, inflation rate is high, interest rates are also high. Foreign countries, developed nations, interest rates are, inflation is less, interest rates are also low. That's all. There's no big difference there. Now, suppose there is this fellow, X Limited. This fellow is in need of 40 lakh rupees for the purpose of a qualifying asset. He wants to construct a qualifying asset in India. He needs 40 lakh rupees. So first what he did, he went to SBI. Now, SBI India told him that the interest rate applicable is 10%. The interest rate applicable is 10%. The interest cost for him comes to 4 lakh rupees. He thought that interest rate in India is very high. Let's not borrow money in India. Rather, we borrow money outside. So, he inquired in some other foreign bank. So, Citibank, New York, agreed to give him loan at the rate of 4%. Only 4%. Indian interest rate is how much? 10%. That is only coming at 4%. His fellow says, fantastic, sir, I want money, please give up. So, he borrowed $50,000 at the rate of 4% from a US bank. Assume that the spot rate, exchange rate in the market is 80 rupees. Thanks to our government, now it is actually 91, but anyway, just for example's sake, it's 80. So $50,000, if you convert at the rate of 80 rupees per dollar, it will be exactly equal to 40 lakh rupees. You happily started construction of your qualifying asset. Are you happy or not? You're very happy. Why are you very happy? In India, had you borrowed, you have to pay interest at the rate of 10%, but now you are paying only interest at the rate of 4%. $50,000, how will you convert into rupees? $50,000, how will you convert into rupees? That you have to go to SBI and you ask them to convert. You told SBI, see, what did I do? $50,000 I'm converting into rupees and I'm getting 40 lakhs and effectively my borrowing rate is only 4%. You are showing off to SBI. SBI fellow smiled at you. Usually bankers, they don't smile much, but that fellow smiled on that day. You made him happy. That mad fellow, why is he smiling? Fine, leave it. Now, at end of year 1, your exchange rate is, one scenario, $1 is equal to 84. 84. Exchange rates will not stay constant, no, so it will change. By the end of first year, interest rate went up to 84 rupees. I'll take another case, right hand side, I'm leaving space. Now, what is the interest cost? Your interest cost is, you borrowed an amount of $1 lakh. Sorry, not 1 lakh. How many dollars did you borrow? $50,000 into, what is the interest rate? 4%. Do the math. 50,000 into 4%, don't worry, $2,000. This into 84. So 2,000 into 84, 1,68,000 rupees. Now, what is the treatment of this? What is the treatment of this? This is capitalized. Tell me, sir, why are you capitalizing? Because you have a qualifying asset. If it is not a qualifying asset, this will go to P&L account. Are you happy or not? You are very happy. There is a side effect of foreign currency borrowing. What is the side effect of foreign currency borrowing? Tell me, ma, how much money did you borrow? Good. You did not borrow 40 lakhs rupees. You borrowed $50,000. On the date of your borrowing, exchange rate was 80. So you received 40 lakhs. Today, spot low, if you have to repay this $50,000, each dollar ka worth is how much? 84. Take your calculator once. 50,000 into 84 you do. 42 lakh rupees. Are you getting it, sir? 42 lakh rupees you have to suffer. But you, at the time of borrowing, you received only 40 lakhs. But for repaying, you have to pay 42 lakhs as on today. How much extra you have to pay? That's an exchange loss only, right? Now, you are having exchange loss on foreign currency borrowing. Now you understood why SBI fellow laughed at you. Foreign currency borrowing, the interest rate will be cheap only, but you will be having a side effect. What is your side effect? Exchange loss, currency fluctuation, or you loss or risk is there. How much loss am I suffering? 84 minus 80 into $50,000. 2 lakh rupees, 2 lakh rupees. Do you understand this? Now, case 2 I am taking, side. What if this is 87? If it is 87, $2,000 into 87, which is 1,74,000. And of course, this 1,74,000 I am going to capitalize. What is the exchange loss this time? 87 minus 80. 7 rupees per dollar loss into $50,000. 3,50,000 rupees loss. Sir, in both the cases, you must understand one thing. In this, you should not have any doubt. What is this? Losses. All losses should go where? P&L account. Correct? In the previous standard, while doing PPE also, I only told that no fool will capitalize loss. Did I use this word? Yes. Losses cannot be capitalized, with the exception. Wait there. What the standard says is, see bro, had you borrowed in India, your interest cost would have been how much? 4 lakhs. In that case, I would have allowed you to capitalize entire 4 lakhs had you borrowed in India. But now that you are borrowing abroad, you are anyway capitalizing how much? 3,68,000. And you are suffering a loss of 2 lakhs. Out of these 2 lakhs, some portion out of the exchange loss, some portion, I will treat it as a deemed borrowing cost. Deemed borrowing, the moment you call it as a deemed borrowing cost, you know what will happen? That amount also will be capitalized. Since borrowing cost is getting capitalized, deemed borrowing cost also will get capitalized. Sir, how much, sir? How much is very easy. You can overall capitalize an amount of 4 lakhs. Overall, you can capitalize 4 lakhs. Now take your calculation, all of you. If I can capitalize 4 lakhs overall, maximum, anyway I'm capitalizing how much in case 1? 168,000. So 4 lakhs of 168, anyway I'm capitalizing. Further I can capitalize how much? 2 lakh 32,000. But to capitalize 2 lakh 32,000, that much exchange loss you should suffer. But actual exchange loss is suffering is only 2 lakhs. So I have to restrict myself only to 2 lakhs. 2 lakhs is capitalized. Maximum 232. But 232 if you have to capitalize, my exchange loss should be 232,000 or more. But your exchange loss is 2 lakhs. So fine, you capitalize only 2 lakhs. Come to case 2. Case 2 also, India point of view, you can capitalize how much? 4 lakhs. You are anyway capitalizing how much? 174,000. Take your calculation, sir. 4 lakhs. So 174,000 anyway I am capitalizing. I still have scope for how much? 2 lakh 26,000 max. What is my exchange loss? 3 lakh 50,000. Out of this, deemed borrowing cost is 2 lakh 26,000. This 2 lakh 20,000 definitely will be capitalized. Sir, what about remaining, sir? 1 lakh 24,000. That 1 lakh 24,000, that your bad luck. That will go off into P&L account. The real loss you are suffering, go die in P&L account. I can't capitalize that. Whereas here, entire 2 lakhs was capitalized. Now observe closely. In one scenario, entire exchange loss got capitalized. In another scenario, entire exchange loss is not capitalized. Some is capitalized, some is not capitalized. So how will you remember all this? Simple, sir. I'll tell you steps, you try to understand from that. Deemed borrowing cost is lower of number 1. Savings in interest cost. You went abroad, why? You went abroad and borrowed, why? What's the reason for that? Cheaper borrowing, correct? A cheaper borrowing, by how much did you enjoy? Had I borrowed in India, both cases I will do. Case 1, case 2. Had you borrowed in India, 4 lakhs cost. Because you are borrowing outside, it costed you 1,68,000. So how much saving did you do? 2 lakh 32,000. Case 1. Case 2, 4 lakhs minus 174,000. How much did you save? 226. Either this or entire exchange loss itself. What is the exchange loss? 2 lakhs here, 3 lakh 50,000 here. Between these two, whichever is lower. Because deemed borrowing cost, from where are you bringing? Out of your exchange loss. Some portion we are treating it as deemed borrowing cost. So deemed borrowing cost can never exceed the exchange loss. So I know I'm saving this much, but my loss is 2 lakhs. How can I capitalize more than 2 lakhs? So in this case, you will restrict yourself to 2 lakhs. But here, your exchange loss is 226. Sorry, your exchange loss is 3,50,000. But you saved an amount of 2,26,000 by borrowing abroad. So up to 2,26,000 loss, I can capitalize it. So this time you will settle for this one. You can never capitalize more than your exchange loss. Remember that. At the same time, your capitalization should not exceed the savings. So there are 2 checkpoints for you. Now, in the first case, total BC capitalized is how much? 168 you are capitalizing, 2 lakhs also you are capitalizing. Total you are capitalizing 3,68,000. Borrowing cost amount transferred to P&L account. Amount transferred to P&L account is zero. Nothing will go to P&L account. Why? Borrowing cost are capitalized. Exchange loss totally called as deemed borrowing cost, that also got capitalized. Nothing is going to P&L account. Whereas in the second case, borrowing cost capitalized is 4 lakhs. How 4 lakhs? 174 capitalized. 226 also capitalized. 4 lakhs capitalized. What went to P&L account? Remaining exchange loss, which is 1,24,000. That will go off to P&L account. Remember, sir, basic common sense. When you make a foreign currency borrowing, you will have two expenses overall. One is interest, one is exchange loss. Count both of them. First case, count both of them. 168 plus 2 lakhs. Totally 368. Had you borrowed in India, your cost would have been how much? 4 lakhs. I would have allowed you to capitalize entire 4 lakhs. No, capitalize entire 368,000. I don't have a problem. Whereas here, your total is how much? 5,24,000. Correct? 5,24,000. Had you borrowed in India, I would have capitalized 4 lakhs. Now also capitalize 4 lakhs. Remaining 124, take it to P&L account. You understand? It's a simple stuff only. Different ways of presentation, sir. Different people understand different methods of presentations. So whatever presentation you apply, this is what you are going to do. Now before we forget, immediately one question we'll do on this. Okay. Come to question number 1. A Limited has taken a borrowing of $1 lakh at the rate of 4% from a US bank on 1/4/2016 for construction of a factory. Okay. The spot rate on that date is $1 is equal to 50 rupees. The above loan was used for construction of plant and machinery, of course. A similar loan could be obtained in India at the rate of 10%. At the end of first year, the exchange rate was case 1, $1 is 54, case 2, $1 is equal to 51 rupees. Calculate the total borrowing cost that can be capitalized. Same questions are number different. Mark it important, sir. The AS11 plus AS16 combined question. It is very, very good question. Now, I'll tell you some steps. A steps if you solve, easily you will be able to get the answer. First rule you have to observe in the question is, on the date of borrowing, what is the exchange rate? 50. So when you got each dollar is 50, by the end of first year, case 1, dollar is how much? 54. Tell me, dollar value increased or decreased? Dollar value increasing is good or bad for you? Bad. Why? We have a dollar payable. So dollar becoming costly means I have to buy dollar at a higher rate and pay. Loss. Second scenario, 51. Better than previous case, but this is also bad only. Compared to 50, 51 is higher. Are you understanding, ma'am? So both are loss cases only. So that's the reason steps will work. So make 2 amount columns. Case 1, case 2. First one, step number 1, sir. Interest cost if amount is borrowed in India. Had you borrowed this money in India, $1 lakh into 50 rupees, so 50 lakh rupees. Had you borrowed in India, India ka interest rate is given as 10%. So you would have nicely capitalized an amount of 5 lakhs. Just tell me one thing. If 5 lakh rupees, is it your actual cash flow or notional? Is it reality or notional? Notional. You never borrowed in India, no sir. Just for understanding the split, I am working out this. This is purely notional amount only. You never borrowed this in India. Step 2. This is your real one. Actual borrowing cost on foreign currency borrowings. Actual borrowing cost on foreign currency borrowings. So $1 lakh you borrowed. At what rate did you borrow? At the rate of 4%. At the rate of 4%. That into, at the end of first year, one case exchange rate is 54. Second case rate is 51. So do the math, sir. $4,000 into 54. First case it is 2 lakh 16,000. Second case 2 lakh 4,000. You must understand with full control and clarity. This will be capitalized. This will be capitalized because the real borrowing cost. Step 3. What is the amount of exchange loss on foreign currency borrowings? How much loss are you suffering? What is there, sir? When I borrowed, it was 50. Today it became 54. So on every dollar, 4 rupees I have to pay more if I repay now. Like that on $1 lakh. My loss is 4 lakhs in one case. In another case, 1 rupee loss, $1 lakh. So 1 lakh. Normally, if this standard was not there, if A16 was not there, the exchange loss would have traveled to P&L account directly. But because A16 is there and you are capitalizing borrowing cost, step number 4. Clearly write like how I am writing. Out of the exchange loss means out of that 4 lakhs and 1 lakhs. The lower of the following is treated as deemed borrowing cost. The lower of the following is treated as a deemed borrowing cost. Now, what are your two checkpoints? First one, savings in interest cost. By traveling abroad, how much did you save? That's nothing but step number 1 minus step number 2. 5 lakhs minus 216, that's 2 lakh 84,000 in one scenario. In another scenario, that's even more, 2 lakh 96,000. Either this or entire exchange loss itself. What is the exchange loss? 4 lakhs and 1 lakh. Now, between these two, you have to select whichever is lower. Because there are two conditions you have to satisfy. Here, this is lower. Here, this is lower. A lower amount you have to capitalize. So, this is capitalized. This is also capitalized. Step number 5. Total borrowing cost capitalized. Total borrowing cost capitalized is equal to step number 2 plus step number 4. Step number 2, I am capitalizing 216. Here I am capitalizing 284. Total I am capitalizing now an amount of 5 lakhs. Whereas here 204 plus 1 lakh. I am capitalizing 3 lakh 4,000. Step number 6. What is the amount of exchange loss transferred to P&L account? In case 1, if you observe, When my exchange loss is 4 lakhs, we capitalized 2 lakh 84,000. A remainder 1 lakh 16,000 is there that will go to P&L account. Whereas in second scenario, my exchange loss 1 lakh, deemed borrowing cost also entire 1 lakh. Entire exchange loss is treated as borrowing cost. So nothing is going to P&L account. Because 1 lakh exchange loss, deemed borrowing cost also is 1 lakh. So this, if you want, this is step number 3 minus step number 4. 3 lakh exchange loss is there. 4 out of that exchange loss, how much is deemed borrowing cost? So the fourth step is there. 3 minus 4 will give you how much is the remaining exchange loss, which could not be treated as a deemed borrowing cost, and that will enter into your P&L account. Yes, guys, any doubt in this? Sir, this is a mix of AS11 and AS16. Two standards ka mixed questions are very, very important, very, very popular question this is. See, there is an economics logic for this. This runs on a concept called as IRPT. IRPT stands for interest rate parity theory, sir. This is based on that economics concept. Anyway, that's all not relevant for you. No, why the standard is so kind that out of your loss, some portion they are asking you to capitalize it. They are not kind and all. The economics, that's how it works in real life also. Anyway, so guys, we are done with this definition of borrowing cost till now. Okay, now the exchange differences point only we covered till now. Sir, if you ask me, sir, in this sum, by the end of first year, it became 54, it became 51. I suffered loss. Sir, what if it becomes 48? That means you are not having exchange loss, you are having exchange gain. Nothing you have to do. Again, happily take it up to P&L account. All this concept, whatever we studied, is applicable only if you are having exchange loss, not when you are having exchange gain. Well, sir, the concept is over for us. Now coming to the theory parts. There are 3 aspects you have to discuss, sir. One is called as commencement of capitalization. One is called as suspension of capitalization. Finally, cessation of capitalization. The 3 points, if they are over, then it's like half of the standard is over. The second half is the most important for this chapter, sir. First half is only concept based. So let's see quickly what is commencement, suspension, and capitalization. Okay. Watch this example, sir. 1/1/2024. This fellow took a loan of 100 lakhs at the rate of 10%. He took a loan. Some fellow told that, sir, who asked you to take a loan right now? This is not an auspicious time to start work. If you start this work right now, the project will be halted, sir, forever. Don't do it now. When should I do? Start on 1st April. 1st April onwards, you start the work, but don't spend the money till 1st of June. Some astrologer told, this fellow followed that. So, 1/4/2024, site planning commenced. Work started, sir. I mean, brick, labor, all this did not start. Basic planning, designing work started. Basic admin approvals and all started. First day from your hand, 1 rupee went out like that on 1st of June. Here, expenditure on qualifying asset is incurred. Borrowing cost from which date are you incurring? Borrowing cost. Interest from which date are you incurring? 1st of January. But did the work start? No. Work started on which date? 1st April. But did you spend money here? No. When did you spend money? 1st of June. The standard says borrowing cost capitalization cannot start unless all the 3 points are satisfied. That means borrowing cost must be incurred, work should be going on, and expenditure on qualifying asset also must be incurred. All the 3 points, first time satisfied when? By 1st June. By 1st June, observe closely. Are you incurring borrowing cost? Yes, sir. On this date, answer what are you looking? On this date, borrowing costs are incurred or not? Borrowing cost means what here? Interest. Next. Expenditure on qualifying asset is incurred or not? The activities must be in progress. Yes or no? The work is also going on. When all the 3 points are cumulatively met on one date, from that date onwards, commencement starts, capitalization starts. So this is your commencement date. Hereafter borrowing costs only you can capitalize. Sir, what will happen to E 5 months ka borrowing cost? This borrowing cost definitely you incurred, but you can't capitalize now. This will go up to P&L account. Just because borrowing cost is the name of the standard, every stupid borrowing cost I will not capitalize. I will start adding to the qualifying asset only when 3 conditions are satisfied for the first time cumulatively. Borrowing cost must be incurred, work should be in progress, and expenditure on qualifying asset also must be spent. Without spending anything on a project, you cannot say, come, ఈ borrowing cost my first 1 rupee I am spending. No, sir, not allowed. Project you should spend money. You borrowed money, no, money you have to utilize it. Work should be going on. Borrowing cost anyway you will incur. The 3 points cumulatively, one day they will meet. That date onwards, you start adding the cost to your asset cost. Till then, whatever interest you pay will go up to P&L account. Clear here? Now, when you say activities must be in progress, and when I say even admin activities, technical works, obtaining permits, these are also okay for me. When I say work must be in progress means literally you should not see that where is cement, where is sand, where are labor people carrying here and there, where is crane. You should not ask all that. Physical construction may not start. You went to an architect, you paid him money, that fellow is designing. You applied to government for seeking approvals. These are all counting as work started. Work started. Physical construction is not the criteria. Are you clear here? Right. So this is about your first concept, sir. The capitalization of borrowing cost should commence when the following conditions are satisfied. Expenditure is being incurred. Borrowing cost being incurred. Activities are in progress. These 3 points if you satisfy, borrowing cost capitalization will start. A starting point is called as commencement. Clear? Then follow this example now. Suppose, sir, another example is 1/4/2025 is your commencement date. This is your commencement of capitalization. All 3 conditions, life law first time satisfied on 1/4/2025. Went on well up to 31st March 2026. On this date, somebody wrote a letter to you. On this, one small love symbol is also there. You with lot of expectation, you opened, what is there? On opening, you understood that there is a stay order in this. You are constructing one huge mall. Apparently, That site does not belong to you. You encroached somebody's land, it seems. Those people have filed a case on you. Matter is in court. You are invited there. So now that there is a stay order, I started fighting. A legal battle started. For 1 year, work halted, sir. Throughout this period, no work. Again, on 1/4/2027, I won the case and work is resumed here. Again, all the three conditions are satisfied. Life went on, and here somewhere on 31st of December 27, qualifying asset is complete. This story, sir. Okay, now watch correctly. During this entire period from here to here, whatever borrowing cost I incurred, no, I will happily capitalize it. What's the meaning of capitalization? Add the interest cost to the cost of the asset. Because asset is getting developed, no. So interest cost is like a construction cost. Go on adding it. But during this 1 year interval period, tell me, sir, is work is in progress? Huh? Work is not in progress. Is expenditure incurred on qualifying asset? Huh? No. Borrowing costs are incurred? Huh? Yes. Can you go and tell the banker that banker work is not happening, I will not pay interest? He'll keep quiet? Huh? No. Even the borrowing cost you're incurring, the other two conditions are failed? No. That means during this period, active development of qualifying asset is interrupted for extended periods. For extended period, active development of the qualifying asset is interrupted. The standard says, kindly suspend capitalization of borrowing costs. Sir, why are they asking us to suspend? Suspend ka meaning is what? Temporarily stop. Sir, why should I not capitalize, sir? Arey, sir, if you capitalize, what will happen? In next to 1 year ka borrowing cost also will be added to the cost of the asset. Asset lo change is there. Huh? Asset work is stopped. No, sir. When work is stopped, how can you say that asset value is increasing? Are you understanding, sir? Work is not happening. No. Borrowing cost, how can you add it to the cost of the asset? Throw it off into P&L account. Is it loss? Sir, why is it loss, sir? Sir, imagine if this stay order was not there, in this year only, my project would have been completed. No? But now what happened? Work card did not get completed. Interest I am still paying. And the loss, how can you capitalize loss? Losses cannot be capitalized. That's the reason this will go off to P&L account. Are you understanding, sir? You are stopping. But here, one small point is, sir. You must know what is this extended period. Standard does not define it. You have to apply your judgment and decide what is extended period. Moreover, sometimes certain delays will be there. They are all expected delays and normal delays. In that case, you need not suspend. Example, you came to me on 1st of January. You asked me to construct a building. I told you that come after 18 months, 1.5 years, your building will be ready. You gave me advance. Okay. Daily I am doing work. In the month of August, September, July, 3 months long, seasonal rainfall came. When rain is happening, still our people will go and construct us, sir. Whenever rain is there, holiday. So because of that, small interruptions are there. You should not say, 2 days you did not work, 2 days ka borrowing cost you cannot capitalize. In next month, 3 days you people did not work because of rain. You cannot capitalize that. That is not tenable, not acceptable. Why not acceptable? Sir, look at this. When I committed to you 1.5 year ka lead time for completing the project, don't I know that in rainy season rain will come? Did I not factor that also? I factored. I know that rain will come. I know that Sunday holiday will be there. Sir, when I say I'll work 365 days or I'll work for entire 1.5 year, does it mean that I'll work every day? Sunday off. 24/7 I'll work, sir? No. Are you understanding, sir? So you should not say morning only work, no, night you did not work, which means basically 14 hours you did not work. 14 hours ka borrowing cost I'll charge it to P&L account. Not acceptable. Whatever is normal delay, okay, no problem. See, sir, rainy season or rainfall came, work stopped for few days. Will it extend my project deadline? It won't. Imagine COVID came, not rainfall, COVID. Entire thing is lockdown for a period of 4 months. Tell me, because of this, my project deadline will get extended or not? Is this unplanned only? No. Unexpected only? Unavoidable only? In this case, you have to suspend. Seasonal rainfall, 1 day strike, these kind of normal things are okay. They will not ultimately extend your project deadlines. They are not extended periods. If you are extended period, you will suspend capitalization of borrowing cost. Am I clear here, sir? This is that. Now that again work resumed, in this period also, we will capitalize. Up to what period? Up to 31st December only. Sir, why not beyond 31st December? Beyond 31st December, you may still incur the borrowing cost as long as you don't repay the loan. But work is completed. When qualifying asset is ready for usage, with what phase will you add anything to the cost of the asset? Asset is ready for usage already. So hereafter you should stop. This is called as cessation. The language used in the standard is cessation. You'll cease. You'll stop forever. Suspend is also stop, temporary. Cessation forever. So there are three aspects now. One is commencement, one is suspension, one is cessation. Commencement when all the 3 points are satisfied. Suspension when active development of qualifying asset is interrupted for extended period. What is extended period? You have to decide based on fact and circumstances. But if it is a normal, unavoidable, routine expected delays, you need not suspend. You can continue. But if it is for extended period, unexpected things, in that case, you have to suspend. Once the qualifying asset is ready for usage, then you have to cease forever. You should stop capitalization of borrowing costs. Now, one small point, answer this. Not this example. Sir, I am constructing a building of 3 floors. For constructing this building, I took a loan. Let's say 300 lakhs, 100 lakhs for each floor, okay, at the rate of 10%. In the current year, last day in the current year, I concluded that one floor is complete. First floor is completed at the end of year 1. Remaining 2 floors are under construction, sir, still. My question is simple. In year 1, whatever interest cost is there, you are paying. What is the treatment of that? Can I capitalize anything or no? Simple question. Can I capitalize? Or will anything go to P&L account? Will anything go to P&L account? First year law. Completely will be capitalized. Nothing will go to P&L account. Why? The second and third floor they are not completed. First floor is completed when? On the last day. Throughout the year, first floor also was not ready for usage. So throughout the year, the asset is not capable of giving any benefits. So interest cost, whatever is there, is fully capitalized. Do you agree with this? Right. Now, this is first floor, okay. Year 2. Year 2, my position is like this. This is my first floor. This is my second floor. Third floor still under construction. This second floor, this is first floor. If for second floor got completed at year 2 ending, you tell me now interest cost. What is to be done with this? Very simple guess. Capitalize or charge to P&L account. Listen carefully. First floor is completed when? First year. Even though second and third floor are still under construction, can I rent out this first floor to a supermarket or not? Possible or not possible, sir? Second and third are under construction, sir. First floor parking over. Can I rent it out to some restaurant? Can I rent it out to some supermarket? Possible or not possible? Possible. That means first floor is capable of being used even though second and third floor are under progress. That means interest cost, which relates to first floor, will be charged off to P&L account. That's capable of giving you benefits. Whereas whatever is related to second and whatever is related to third floor, these two will be capitalized. You should not argue that second floor is completed. No, sir. When is it completed? Last day it got completed. I can't capitalize. You can easily guess in year 3 what will happen. In year 3, all 3 are completed, sir. Now. So year 3 ka answer you tell me. Interest cost. Whatever is related to first floor, something related to second floor construction, something related to third floor construction. Whatever is related to first floor construction, this is charged off to P&L. Whatever is related to second floor, that also will be transferred to P&L. Reason is simple. Second floor is capable of giving you benefits. It will be transferred to P&L account. Whatever is related to third floor got completed at the end of year 3. So this will be capitalized. For fourth year, what will happen? Total interest cost will go off to P&L account. Do you understand what is happening here? In this example, what you have to observe is borrowing cost capitalization relating to first floor ceased at the end of first year. Second year, it went off to P&L account. Borrowing cost relating to second floor ceased at the end of second year. So third year, it went off to P&L account like that. So cessation is happening phase wise. Phase wise cessation also happens. That is also okay, provided the completed phase is capable of giving you future economic benefits. In that case, phase wise cessation is also okay for us. So do you understand what I am trying to say? Right. Now, answer this. Suppose, sir, I am having some petrol refinery plant. Okay. I am having some petrol refinery plant. Where I have to construct 3 chambers like this, and ultimately crude oil will be processed into some petrol. So this is chamber A, B, C. This is overall work. By the end of first year, only this is completed. These two are incomplete. This is not started also. Can I do cessation of borrowing cost capitalization phase wise? Sir, if I input crude oil here refined petrol will come. In the current year, A chamber is ready, B and C are not ready. All 3 I am constructing using borrowed money only. Since A is complete, A related borrowing cost, can I transfer to P&L account in second year? Can I do that? No. Why? Is A alone capable of giving you benefit? If I put crude oil, what will happen? It will fall down. No, sir. There is no B and C to capture that and refine it. So even though A is complete, it is useless. It is not. It's ready. It's not ready for my intended usage. Whereas here, first floor is ready for your intended usage. As it gets completed, you can use it. Here, as it gets completed, you can't use it unless all the 3 are ready. Here, phase-wise cessation is not possible. You can cease borrowing cost capitalization when the entire refinery construction is done, not before that. Are you clear here, sir? So what did we cover till now? We covered three concepts: commencement, suspension, cessation. What are we left with? Only one small concept, but that is a Bahubali: special and general borrowings. Once you cover this, next half pages and it is over. But all the questions will come from this only. That's the reason I could not show you any question till now, except for that foreign currency stuff. Well, guys, before we go into questions and all, I hope you are clear with the basic concepts. Borrowing cost meaning we studied, qualifying asset definition we studied, and then foreign exchange identification we did, and commencement, suspension, cessation. That's all. Now, coming to specific and general borrowings. See the words specific borrowing, the word itself tells that this is a borrowing which is made exclusively for the purpose of qualifying asset. Okay, so this is a borrowing which is made exclusively for the purpose of acquisition, construction, or production of a qualifying asset. If expenditure on qualifying asset was not incurred, a borrowing also would not have been there. That sort of direct relation. This is called a specific borrowing. Now, sir, what is so special about this? Special is simple, sir. The standard says borrowing cost to be capitalized is equal to the actual interest cost on specific borrowings minus any income on temporary investment of borrowed funds. In net interest cost only you have to capitalize. See, one thing, you have made a borrowing. On this borrowing, whatever interest cost is there, that you have to capitalize. Not fully. E borrowing amount, see sir, for example, you borrowed 100 lakh rupees. Just because you borrowed 100 lakh rupees from SBI, that does not mean that all 100 lakhs you'll spend on the project on the first day. No, you will spend money whenever there is a need. Okay, so today you spend 20 lakhs, another 80 lakhs later on, after 1 week, slowly, you'll spend. Meanwhile, in money, you are not a fool to hold it idle cash. You will go and deposit somewhere, you'll invest somewhere. That investment can give you some income. Our income, you have to reduce it from the interest cost on the original borrowing. And net interest cost only you have to capitalize, not the gross amount. Remember this. So interest cost will capitalize, but after setting off the interest income on temporary investments made, the net borrowing cost you have to capitalize. In this, the beauty is specific borrowings, the interest cost fully will capitalize, but remember, only from which date? Commencement date. From the commencement date, whatever interest cost you incur, fully you have to capitalize after reducing the interest income on temporary investment of borrowed funds, if any. Now, example. You have borrowed rupees 20 lakhs at the rate of 10%. And spot sir, on the same day, you spent 12 lakhs. After 6 months, you spent another 8 lakhs. By the end of 12 months, qualifying asset work is still in progress. It's not yet completed. Throughout this period, carefully watch. How much money did you borrow, sir? 20. How much did you spend? 12 lakhs you spent. Remaining, how much money is there? 8 lakhs. 8 lakhs you spent after 6 months. So for the first 6 months, 8 lakhs was with you only. What you did, 8 lakhs you invested somewhere. So during this period, interest income earned is equal to 50,000. Sir, why did you get interest income? 8 lakhs invested somewhere. Okay. Now, 50,000 is little high, sir. Let's make 30,000. Okay. Now, how much borrowing cost can I capitalize? Since this is a specific borrowing, interest cost incurred is equal to 20 lakhs into 10%, which is equal to 2 lakhs minus income from temporary investment of borrowed funds, 30,000. Net it off. Net how much are you having? 1,70,000. E 1,70,000 is capitalized. Observe what kind of ideas people get is, sir, 12 lakh rupees borrowed fund is used in the project for entire 12 months. So on 12 lakhs, 10% for full year, capitalize 1,20,000. 8 lakhs borrowed fund is used in the project in the current year for only last 6 months. So on 8 lakhs, 10% into 6 by 12. You should capitalize only 40,000. So total you should capitalize only 1,60,000. This is one argument people do. Wrong. Wrong, sir. Why this is wrong? Why this is wrong is, the borrowing what I made is not some general borrowing or something. It is specific borrowing. What's the meaning of specific borrowing? For this asset only I made that borrowing. If this asset was not there, a borrowing would not have been there. That sort of direct relationship. So how much you spent on what date is irrelevant for me. All I want is, please satisfy 3 conditions. What are 3 conditions? Commencement conditions. What are the commencement conditions? Borrowing cost must be incurred. Of course, when you borrow money, obviously borrowing cost will be incurred. Number 2, spend at least 1 rupee spent on qualifying asset. Expenditure on qualifying asset must be incurred. Number 2. Number 3, work should be in progress. Activities must be in progress. If these 3 points are satisfied, I don't care how much you spent. Full borrowing amount into interest cost, I'll capitalize it. Net of any income from investment. So net borrowing cost. If you ask me what is the entry for this, to get this effect, what should I do? What will you do? You wrote an entry anywhere like this. Interest expense account debit to bank. On 20 lakhs, 10%. 2 lakhs, 2 lakhs. This you paid. Okay. On your investments, you received some income. 30,000. If I don't do anything, this will go to P&L account. This also will go to P&L account. But we have a qualifying asset. These things cannot go to P&L account. These are to be capitalized. How will I capitalize this? Interest expense. Now, whatever is your qualifying asset, let's say it's a plant, work in progress, to interest expense with an amount of 2 lakhs. Similarly, interest income is there, which ideally should be credited to P&L account. This also will be credited to qualifying asset. Observe, your qualifying asset is now debited with 2 lakhs, credited with 30,000. Net debit is how much? 1,70,000. This is maths. This is coding the journal entry. How to get 170 to the asset side? This is how. This anyway you will pay, this anyway you will receive. If you don't do anything, nominal accounts will go off to P&L account. Don't take it to P&L. Adjust this to the asset cost. This cost asset also debit balance. So direct add. This income, credit balance, asset, debit balance. So asset you have to reduce. Well, so this is about specific borrowings, only this much, nothing else. Now comes the most important story of general borrowings. Guys, this is openly I'm telling you will be confusing. Pay attention, 100% you try, it will come. It's easy. That's the reason it's confusing. General borrowings. General borrowings means it sounds funny, but the definition is like this. These are borrowings which are other than specific borrowings. In your balance sheet, whatever borrowing is there, if it is not a specific borrowing, are automatically treated as a general borrowing. Now, see, ma'am, you are constructing a plant under construction. You are spending money, the work is going on. Okay. For this plant, exclusively, you did not borrow any money. You never went to SBA, submitted a proposal, nothing. But in your balance sheet, already one 10% loan is there which you have taken long back. Some amount is there. Once upon a time, you issued a 12% debenture. You have a 8% working capital loan. These three borrowings are there in your balance sheet. These are not specific borrowings. They are not obtained for this asset specifically. They are simply other borrowings which are there in your balance sheet. Now listen carefully. What our standard presumes is this money you used from this pool. E money A is used here. Sir, when did I use, sir? You don't know, sir. See, you did not borrow. You did not borrow money specifically, but you are having money. You are spending on the qualifying asset. Balance sheet liabilities, borrowings are there. The standard says you are funding your qualifying asset with the help of general borrowings. You did not specifically borrow anything, agreed. But then how did you get money? Sir, asset side cash is there, sir. And I will say liability side borrowing is also there. So, borrowed money only is used. Sir, out of these three, which one, sir? I do not know that. I do not know that. But the standard believes that these borrowings are used to fund this asset. So what you have to do now? On this expenditure, since this expenditure is funded using general borrowings, interest you have to add here. Now, which interest I have to add? 10, 12, 8, which one? For that, the standard says determine a capitalization rate on general borrowings. Mix all these borrowings and get me one single rate. This will be your step number 1. Your first step is to convert all that borrowings into one single rate. Step number 1. Now, how to get this rate? Capitalization rate is equal to total interest cost on general borrowings divided by weighted average general borrowings outstanding during the year. See, the formula looks little heavy, but it has got lot of meaning and sense in it. What is it saying? Whatever borrowings are there, all borrowings ke interest right in the numerator. Our borrowings ke numbers write it in the denominator into 100. Sir, you told something like weight and all. What is that? I'll tell you. First, let's start with an easy example. 10% loan you are having, let's say 200 lakhs. 12% loan you are having 150 lakhs. Okay, there are two general borrowings. I asked you average rate. So first go and calculate interest cost. 200 lakhs into 10%. How much is that? 20 lakhs. 150 lakhs into 12%. How much is that? 18 lakhs. So total answer 38 lakhs. So if you apply this formula, capitalization rate is equal to numerator 38 lakhs, denominator, what is your borrowing? First borrowing 200 lakhs. If 200 lakhs is outstanding for full year, multiply with 12 by 2. 150 lakhs is outstanding for full year. That's the reason, no, 150 lakhs into 12% I directly did for interest. So 150 lakhs also is outstanding for full year into 12 by 12. Multiplying with that time outstanding 12 by 12, 9 by 12 and all, that is called as weighted. So 12 by 12 if you multiply or not, answer will be same only, no, why to multiply? In case it doesn't matter. I'll show you next example where it matters. Timing, let's have a start. So answer will be how much, sir? 38 lakhs divided by 350 into 100. 10.86, huh? What is the meaning of this? This borrowing cost is 10%. This borrowing cost is 12%. On an average, 350 lakhs has got a borrowing cost of 10.86%. This is how you rate. So this is one example. The example, if you see, you will understand that how to compute the rate, but you still do not understand what is the significance of this. Because 12 by 12 is 1. Whether even if I don't take that and directly rate 350 in the denominator also, answer would have been same. I'll tell you one more example to explain you what is the significance of that weighting. Carefully watch, sir. Here, 0 time, you borrowed 100 lakhs at the rate of 12%. At 6 months time, you borrowed another 100 lakhs at the rate of 12%. This is from SBI, this is from ICICI. Okay, now you tell me what is the interest cost at the end of the year. Do 100 lakhs into 12% into 12 by 12. You want calculator? 100 lakhs into 12%. Very nice people. 100 lakhs into 12%. How much? 12 lakhs. What about this one? 100 lakhs into 12% into 6 by 12. 6 lakhs. Don't trouble yourself. What is the total interest cost? 18 lakhs. Now, observe this closely. I am hiding this, okay? What is the cost of borrowing? You know the answer, 12%. Sir, I am able to see, sir. Okay, fine, you know. You know. My question is, how will you calculate that? If you do like this, total interest cost, how much is total interest cost? What is the total borrowing? 100 lakhs plus 100 lakhs into 100. Go check. 18 lakhs by 200 lakhs. You very clearly know this is wrong answer. Why is that wrong answer? I know the answer already. Answer is how much? 12%. Total interest divided by total borrowing. Am I getting correct answer? No. Sir, why did we get wrong, sir? You tell me. How did you get 18? 18, how did you get? 12 lakhs plus 6 lakhs. Now, check my formula answer. Whatever formula I told you, based on that, try to work out the answer. 12 lakhs plus 6 lakhs divided by. If first 100 lakhs is outstanding for how many months? 12 months. Second 100 lakhs is outstanding for how many months? 6 months into 100. That is 18 lakhs divided by 150 lakhs into 100. 12%. Now you will get the correct answer. Sir, why are we getting correct answer now? Watch this. This is interest expense for how many months? 12 months. This is here also borrowing you are taking for 12 months. This is interest expense for how many months? 6 months. Borrowing also you have to take for 12 months. Otherwise, fraction will give you wrong answer. Above example, what happened? 6 you took here. Here you took full borrowing. That is wrong. By taking full borrowing, you are indirectly doing 12 by 12. Whereas this is only 6 by 12 interest. Are you getting it, sir? That is the reason formula. That's the reason it total you cannot write. Be very, very watchful. For whatever period outstanding time to weight you have to give in the denominator. Numerator interest anyway you will give. You tell me, 6 lakhs, how did you get? 6 lakhs, how did you calculate? 100 lakhs into 12% into 6 by 12 only. No. E weight when you are giving here numerator, denominator also you have to give. Otherwise, rate will be wrong. Here, how did you calculate? 100 lakhs into 12% into 12 by 12. Of course, a 12 by 12, even if you don't write also, it's okay. So, denominator also, I'm writing 12 by 12. Like numerator, like denominator. Otherwise, ratio will be wrong. Are you getting it, sir? This is the first step. First step, sir. We are not bothered about qualifying asset. We are only bothered about what are the list of borrowings you are having. I want a rate on your borrowings. I am not even looking on your asset side. Am I clear? I am not looking on the asset side. I am only showing you my liability side. Now step number 2. Step number 2. This is expenditure on qualifying asset. Financed from general borrowings. I'll give you example. Try to understand from this. Simple example. 1st April, you spent 10 lakh rupees. Expenditure on qualifying asset. 1st April. Then you spent on 1st of October rupees 40 lakhs on qualifying asset. Then you spent on 1st of January another 12 lakhs on qualifying asset. By 31st March, balance sheet date has come. Assume that your capitalization rate is equal to 12%. Step number 1 का answer 12%. Okay, now your job is to tell me how much borrowing cost can you capitalize. What the standard assumes? All this money is funded out of general borrowings and the standard assumption. Whether you really funded your own generated profit money, I don't care. Standard assumption, just blindly apply that. So what you will do now? Watch this carefully. 10 lakh rupees general borrowing I spent in the project for a period of 1 year. The full 1 year cost. Please do the math. 10 lakhs into 12% into 12 by 2. How much is that? 1,20,000 rupees I can capitalize. Whereas on this 40 lakhs into 12% into from 1st October onwards only spent now. So it's on specific borrowing, general borrowing. Whenever you spend from that day onwards only interest can be capitalized. So 40 lakhs into 12% into 6 by 12. So 2,40,000. Next. $12 lakhs into 12% into 3 by 12. 36,000. Total up 396,000. That's all. Your answer is over. This is borrowing cost capitalized on general borrowings. This is the number which you have to add it to your cost of the asset. Sir, every time a question comes, we have to draw a line like this. Sir. There can be a smart work, but this if you understand first. I want you to observe this one versus this one. Earlier specific borrowing example, there also I wantedly spent into installments. But this for 12 months, this for 6 months, I didn't do that. What did I do? Entire 20 lakhs into 10%. The 12 lakhs you spent for 12 months, 8 lakhs you spent only for 6 months, not like that. And specific borrowing. On what date, how much you spent is irrelevant for me because a borrowing is exclusively living only for you. Whereas the general borrowing, sir, this borrowing I never bought it for this asset, but whenever I spend, I believe that I'm using that borrowing. So 10 lakhs general borrowing is used on our project for a period of 12 months. 40 lakhs general borrowings used in our project for a period of 6 months, like that. Okay. Now, suppose you don't like this presentation, I have an alternative version. Alternative version is work out average annual expenditure on qualifying asset financed by general borrowings, which means 10 lakh money is used in the project for a period of 12 months. 40 lakh money is used in the project for a period of 6 months. 12 lakhs money is used in the project for a period of 3 months. Do the math. 20, 30, 30 plus 3, 33 lakhs. 20, 23, correct, 33 lakhs. What is the meaning of this understand? You telling me that 10 lakhs used for 12 months, 40 lakhs used for 6 months, 12 lakhs used for 3 months is as good as 33 lakh rupees of borrowed fund is used in the project throughout the year. Okay, this is step number 2 over. Step number 3, the last step. Borrowing cost capitalized is equal to 33 lakhs into step number 1, 12%. Go check the answer. You'll have 3,96,000. No surprise, I know that answer already here. If you don't like that big presentation, you can do 3 steps neatly. Step 1, rate you bring. Step 2, average expenditure on qualifying asset out of general borrowings you work out. Step 2. Step 3, marry those two. Rate into qualifying asset expenditure. Do you understand? So step number 1 is not based on expenditure. Step number 1 is based on borrowings. Step number 2 is not based on borrowings. Step number 2 is based on expenditure incurred on qualifying asset. Step number 3, I'm mixing both of them. And I'm identifying number, this will be capitalized. Are you understanding, sir? 1-2 questions on this, then you'll get more comfort. Okay? Chalo, let's pick up the question. Directly, good question only I'm taking you. Moon Limited you'll do. Do Moon Limited, 10th one. Okay, Moon Limited begins construction on new building on 1st January 2018. Please underline the date. Sir, construction work started on 1st January 2018 is the meaning of it. In addition, Moon Limited obtained 1 lakh rupees loan to finance the construction of the building on 1st Jan 18 at an annual rate of 10%. Please underline that. Moon Limited. You know what is this? Specific borrowing. You obtained a loan for construction exclusively for the purpose of qualifying asset. You brought a loan. Very clearly, this is a specific borrowing. The company's other outstanding debt during 2018 consists of 2 loans of 6 lakhs and 8 lakhs at a rate of 11 and 13%. These are what now? Good. These are your general borrowings. Expenditures that are made on the building project were as under. Jan you spend something, April you spend something, July you spend something, December you spend something. He's asking, how much can I capitalize as borrowing cost? What's the total cost to be capitalized including borrowing cost? Fine, fantastic. You see, sir, if this is all building a cost, anyway we will capitalize this, plus some extra borrowing cost also you have to capitalize. Overall amount he is asking. Okay. Now, in your notes, sir, first and foremost, sir, identify specific borrowing and understand how much can be capitalized there. Borrowing cost capitalization is equal to how much is the specific borrowing cost you have made? 1 lakh. What is the interest rate at which you bought? 10%. So 1 lakh into 10% minus income on temporary investments, which is 0, not there. So entire 10,000 is capitalized. With this, specific borrowing cost story is over. Let's come to general borrowings. General borrowing story, I told you 3 steps. As it is, apply 3 steps. Perfect, correct answer will come. Don't bypass your thought. Step number 1. First, work out a capitalization rate. Means average borrowing rate I want, sir, simply put. Average capitalization rate on general borrowings is equal to, how many borrowings did they give us? 6 lakhs and 8 lakhs. So on 6 lakhs, interest rate is 11%. On 8 lakhs, interest rate is 13%. Nothing is given means e borrowings are outstanding throughout the year only. 6 lakhs into 12 by 12, 8 lakhs into 12 by 12 into 100. So that would be 1 lakh 70 divided by 14 lakhs percentage. 12.1429%. 12.1429%. Correct only. Or else just keep it 1.4, just like in the question they did. This is how you do it, sir. Okay, step number 1 is sorted. Step number 2. Average annual expenditure on qualifying asset out of general borrowings. See, whatever money is spent on the project, in that how much is funded out of general borrowings, that I want to know on an average basis. Now how to do that? Whatever expenses they have given, list it down. That stupid, you see what they did. He told Jan 18. Jan 18 is not a date, no sir, the month. A money when did you spend? Month beginning, month ending, month middle. You have to tell me some date. Because depending on the date, weight ka counting will start. That stupid did not say. But looking at study material, suggested answers and all, this kind of situation, they are assuming that this is happening at the beginning of the period. So, first Jan 18. How much did you spend? 2 lakhs. The next installment, when did you spend fast? April. How much did you spend? Next. 4 lakhs. Then, how much? And you are closing on 31st of December. This is your balance sheet. Okay, now watch carefully. This total expenditure, sir. Did you borrow exclusively any amount for the purpose of this project? Specific borrowing is there or not there? Specific borrowing is there, no? How much is the specific borrowing? 1 lakh rupees. But when you borrowed 1 lakh rupees exclusively for the purpose of this project, our money definitely would have spent here. So you have to believe, and which is natural also, that out of this 2 lakhs, 1 lakh rupees is funded out of specific borrowing. The remainder 1 lakh is funded out of general borrowing. This totally general borrowings. This totally general borrowings. This is also totally general borrowings. In fact, this 1 lakh borrowing cost we already calculated here. Be careful, don't forget. Now, average expenditure on qualifying asset out of general borrowings alone I want. Don't be innocent and write 2 lakhs into 12 by 12. That is wrong. A 2 lakhs low, 1 lakh is specific borrowing for which already we calculated and we capitalized also. You worry about the other 1 lakh into 12 by 2. 3 lakhs into 9 by 12. 4 lakhs into 6 by 12. 1,20,000 into 1 by 12. Do the math. Five lakh 35,000. What does this 5,35,000 imply? It means that on an average, 5,35,000 general borrowing is used throughout the year. That's the meaning of it. Step number 3. Borrowing costs capitalized. On general borrowings to qualifying asset is equal to 5,35,000, which is your step number 2, into 12.14%, which is capitalization rate for step number 1. 535,000 into 12.14 percentage, 64,949. So finally, total borrowing cost capitalized 10,000 rupees on specific borrowings, 64,949 on general borrowings. Total it is 74,949. The final answer. Guys, the proper 6 to 7 marks question this is. In this, should not be any scope of error or something. In this, what mistake people do, here they spoil it. Be careful. Are you understanding what is happening? Right. Now, that fellow asked total cost of capitalization. Total qualifying asset cost is equal to whatever expenditures you spent, everything you add, 2 lakhs plus 3 lakhs plus 4 lakhs plus 1 lakh 20,000 plus finally 74,949. 7, 10, 1020, 1094. That is your 6 to 8 marks stuff, sir. You just watch where we can make a mistake, where my mind can mislead me. Keep on thinking. At the same time, conceptually be supreme. No uncertainty, no doubt. Sir, some as such is over here only, but I will take you to one next level. Try to understand this. Sir, the year 1 over. Now here, continuation. In year 2, 1st Jan 2019. Next day morning you got up, you spent off 5 lakh rupees. In the month of June or 1st June or 1st of July only will take. It's easy to calculate. You spent off another 12 lakhs. And this is 31st of December, your balance sheet date. Now the question is, how much will you capitalize? How much borrowing cost will you capitalize for year 2? Listen, there is no specific borrowing. Whatever is there, you already spent off. So this is general borrowing. This is also general borrowing. Okay, na? Now, what the standard says is, normally what comes into your mind is this. What is there, sir? If 5 lakhs is existing for how many months now? 12 months, which is equal to 5 lakhs plus. If 12 lakhs money you spent in the middle of the year, it means we use this borrowing for a period of 6 months. So, on an average, if I do this, 5 plus 6, it will be 11 lakhs. So, on 11 lakhs, our capitalization rate is how much? 12.14%. So, 11 lakhs into 12.14%, which is equal to 1,33,540. Normal thought, this is wrong. Sir, why, sir? Where did we go wrong? Whatever you did is right only, but it's incomplete. Sir, how, sir? Sir, current year expenditure ka borrowing cost you capitalized, okay. But last year already incurred borrowing cost is also borrowing only, no? What's the cost of asset last year? 10,94,949. This is also fully funded by borrowings only. Correct? So, in this, how much is general borrowing? Sorry, or else let's say your opening balance of qualifying asset, 10,94,949. In this, 1 lakh rupees is specific borrowing. Rest all is funded by general borrowings only. Do you agree with that? Other than 1 lakh rupees, rest all is funded by general borrowing only, no? Right. So our remaining 9,49,949, whatever is there, on that also, that is also outstanding for entire 12 months. That plus this plus this. So 11 lakhs is correct, but opening balance also have to consider. So 9,94,949 plus 11 lakhs. So 20,94,949. So the number will be 20,94,949 into 12.14% into 12.14%. 2,54,327. So this is your average expenditure on qualifying asset out of general borrowings. This is borrowing cost capitalized. Now, observe one small point. See, sir, nobody asked you this kind of detailed question till now. But RTP November 24, one question is there. A question people are explaining very wrongly in various places. A question, if you have to correctly understand, this is the logic for that. Once again, understand. First year, you should not have any doubt, sir. 1 lakh specific borrowing happily capitalized. Remaining expenditures, whatever are there, you presumed that they are incurred out of general borrowings, that also you capitalized. Over. First year over. Work is still not completed. You second year started. Second yearly, you again spent money. I will believe that this also funded out of general borrowings. That also will capitalize, no problem. What you should not forget is, last year whatever you spent, last year ka borrowings whatever are there, they are there in the current year also, no? Those borrowed money is already used in our qualifying asset, no? So current year also capitalization has to continue on the opening balance. But your opening balance 10,94,949, 1 lakh rupees is specific borrowing. Correct? 1 lakh is not funded out of general borrowings. So from the opening balance, remove 1 lakh. Remainder 12 by 12, whatever is there, this entire expenditure is funded by general borrowings. Now you'll ask me one question. Sir, ఈ 10,94,949 74,949 interest is there. Our interest is also part of this. And now on this number, you are again applying 12.14%. That means the interest on interest you are doing, sir. How is this correct? My question is simple. You borrowed 1 lakh specifically. Our money you throw into the project. You paid interest at 10,000 rupees. From where did you pay the 10,000? Where did that money come from? Project generated money, yeah? No work not completed. So our 10,000 rupees also is paid out of general borrowings only. Which 10,000? Specific borrowing interest cost, which you capitalize, no. Our 2 cash out bank is there, that also came from general borrowings. Next, 64,949 interest is there. From where did you pay that? Interest on qualifying asset capitalized is also paid out of general borrowings. So what is funded out of general borrowings is completely other than 1 lakh rupees. Are you understanding, sir? So your opening balance includes interest also, which is previously capitalized. So the borrowing cost capitalized on general borrowings. If you ask me, borrowing cost capitalized on specific borrowings, of course that is also there. How much is that? What is it? 1 lakh into 10%? Here I removed 1 lakh, no. What is it? 1 lakh? Specific borrowing. On that cost separately you are incurring. And anyway you will capitalize. This is general borrowings. Now, I want you to observe something very deep. See, sir, when you are learning a standard, you have to learn it completely. What is the point I want you to observe is, in 12.14, how did you get? You took borrowings and based on borrowings you worked out this, correct? Based on borrowings you worked out this. Whereas, E number, how did you work out? E number, E 12.14% you applied on expenditure incurred, not on borrowings. Not on borrowings. We applied this on expenditure incurred. There is every possibility that E amount may exceed the actual borrowing costs. Now, take your calculation. Do only the numerator and see. Only the numerator. 6 lakhs into 11%. What is your interest? 66,000. 8 lakhs into 13%. 1 lakh 4,000. Add both of them. What does it mean? Asal actual borrowing cost is 170. So actual borrowing cost which is spent only is 170. First year you capitalize how much, sir? 64,949. Okay. Remaining will go to P&L account. Second year, you are telling me that you will capitalize 254,327. Are you mad or what? So actual borrowing cost is 170. How can you capitalize 254? In this case, you will restrict it. Restricted to actual borrowing cost of 1,70,000. Wait a moment. This I will keep it aside for a moment. Sir, how did you get 1,70,000? 6 lakhs into 11 plus 8 lakhs into, sir, borrowing cost capitalization means what? I am paying interest to the banker. Our interest, instead of coming to P&L account, it should go to the balance sheet. But how much can I transfer to balance sheet? It can never exceed the actual interest, no. Actual interest paid is how much? 170. How can I capitalize more than that? But the rate you are applying on what? Expenditure you are applying. Because of that, it's every possibility that you will exceed 170. In that case, restrict it to 170. So the 170 is 10. Total, you can capitalize only 1,80,000. Now you see, sir, I know it has become little heavy for you. Your examination question which came in the past stopped here. 74,949 the question stopped off, sir. The extra point what I told you is the next level. This is relevant, sir. This is relevant. You will understand that when I take you through one question. I am not creating any questions. November 24 RT pillar, sorry, September 24 RT pillar question is there. I will show you. That's part of our book also. And I will now show you the verbatim of the standard. General borrowings ka story. Step 1, 2, 3, whatever we discussed are there on the screen. After that, one note point is there. Please read that. Please read that. In that, expenditure to which capitalization rate is applied. You know what is this note point? Step number 2 ka number, how to arrive at. Step number 3, you are applying one rate, no? A rate you have to apply on one amount, na? Amount, how to work out, this fellow is telling you. In this, first to read this point. Read please. The average carrying amount of the asset during a period, including borrowing cost previously capitalized, is normally a reasonable approximation of the expenditures to which capitalization rate is applied in that period. You know what's the meaning of it? Babu, not only current year cost, opening cost, including the borrowing cost already capitalized. That is the number on which you have to apply the percentage. Are you understanding, sir? Not only current year cost, opening balance. Our opening balance of borrowing cost already capitalized also is included. So you will have to work out interest on interest also. He's telling that. Suppose you come and tell me, sir, I am constructing a world marvel, sir. It will change the look of the entire area. Government is so happy. They came and here gave me a government grant of 8 lakh rupees. When government gives a grant of 8 lakh rupees, you know what is the meaning of it? 8 lakh rupees ka funding helped your business for another 3 months. So borrowing cost is not incurred for that period. So while doing this, you have to minus that. 8 lakhs money is not used for a period of 3 months because grant I received. Adjustment you have to do. So that is given in the previous part. Expenditures are reduced by any progress payments or any grants received in connection with the asset. If any inflow is coming, minus that. Outflows you are adding, no, 3 by 12, 6 by 12 like that. Inflows if you get, minus that. And the amount of expenditure on qualifying asset include only those expenditures that have resulted in payment of cash. Money you should spend, then only it will go there. Sir, accrued, incurred, don't consider that. Cash should be spent, then only will add. Next. Last point, please see. Borrowing cost capitalized during a period shall not exceed the amount of borrowing cost it incurred during the period. See, why is he giving you the disclaimer there? Why is he controlling you? Because step number 3, rate you are applying on expenditure. So you will get one number, a number you will capitalizing it. But there is every possibility that that number may exceed the actual borrowing cost what you are incurring. If it happens so, then stop yourself only to the extent of actual borrowing cost. You observe. In our example, first year, numerator you see, my total interest cost paid to the bank is 1,70,000. Out of that, 64,949 I capitalized out of general borrowings. What happened to remaining 105,051? Went off to P&L account. But in second year, when I did the same type of computation, my number came to how much? 2,54,000. As actual borrowing cost of 170. When actual borrowing cost of 170, how can you capitalize 254? You can't. So whatever excess amount is there, what is not there, how can you capitalize? So enter 170 you capitalize. That's all. Are you getting it, sir? The deep math stuff, sir, but this is very, very, very important stuff. These are things which people do not understand properly. And second thing, people assume that general borrowings relation is there. No relation, nothing, sir. Balance sheet of whatever liability is there, which is other than specific borrowing, you have to treat it as general borrowing. You have to presume that every rupee of that is used in this qualifying asset. Whether it is really used or not, I am least bothered. Balance sheet liability is there, I will bring it up. Chalo, sir. This is one question. Question number 10. Question number 11 is easy only. Come to question number 12. Similar one, but a small differences. Go through it. K Limited began construction of a new building at an estimated cost of rupees 7 lakhs on 1st April 20x1. Okay. To finance the construction of the building, it obtained a specific loan of 2 lakhs from a financial institution at an interest rate of 9% per annum. Oh, wait there. How clearly he is telling you specific loan of 2 lakhs at the rate of 9% per annum. Clearly specific borrowing. Company's other outstanding loans, these are general borrowings. 7 lakhs, 9 lakhs, rates of interest are given. Similarly, just similar to previous sum, expenditure incurred on construction was 1, 2, 3, 4 quantums we spent. E sum previous sum difference is this one, sir. The construction of the building was completed by 31st of January. Your current year started when? 1st April 20x1 when you borrowed money. And building got completed on 31st of January. So up to 31st March, it was not there. 10th month building got completed. February and March interest you cannot capitalize also. Cessation of capitalization will happen on 31st of January. Careful. Following the provisions of A16, he'll ask you how much you can capitalize. It's no big deal. Tell me, sir, what is the specific borrowing amount? 2 lakhs. How much did you spend on first day? 1,50,000. This is totally out of. It was borrowing. Second installment you spent how much? In this 2 lakhs, 50,000 rupees is out of specific borrowing. Remaining 1,50,000 rupees is out of general borrowings. This is general borrowings, this is general borrowings. Are you understand, sir? Your specific borrowing is how much? 2 lakhs. Apply FIFO basis. First in, first out. First you have to spend that. After spending that only general borrowings you should invoke. Very logical also, no, sir. Exclusively for you only I borrowed, no. So first you have to spend that. Once that is over, remaining you believe that it's funded out of general borrowings. Okay, now let's try to solve this. What's the question number, ma? 12. First, most easiest one answer. Specific borrowings. Borrowing cost capitalized equals to, how much did you borrow, guys? 2 lakhs. What is the interest rate? 9%. How much is that? Into 10 by 12. Why? 10 is my lucky number, sir. Up to 31st January. Why? Project is bloody completed on that date. If you forget that point, you will capitalize entire 12 months interest as wrong. Cessation of capitalization will happen. How much is that? 15,000. Huh? If 15,000 will be capitalized. If any interest income was there, I would have deducted that. It's not there. General borrowings. Guys, as usual, step 1, 2, 3. Sir, it's not like steps will carry marks or something. No. You'll frame your thought process correctly. First, capitalization rate. Average borrowing rate, sir, nothing else. There are 2 borrowings, no. Please tell me the numbers. 7 lakhs, 9 lakhs. 7 lakhs ka interest is how much? 12%. 9 lakhs ka interest? 11%. Divided by 7 lakhs is outstanding for full year. 9 lakhs is also outstanding for full year. Into 100. 84 plus 99. Divided by 16 lakhs. 11.4375%. This is your interest, ma. One more point. Your stupid project might have been completed in 10 months. That's okay. But step number 1 is not based on your qualifying asset. Step number 1 is based on borrowings. Step number 2 is based on expenditure on qualifying asset. Step number 1, don't see qualifying asset. Step number 2 don't see borrowings. Step number 3 merge both of them. Step 2. Sir, a timeline, if it helps, please draw every sum low. It will help you most of the times. What is the starting date in the sum? 1st April 20x1. Okay. 1/4/20x1. How much did you spend my here? 150. Next. Next month? 1st August. Okay. 1/8. 1/8/20x1. 2 lakhs. Okay. What next? How much? One more is there? How much, ma? 1 lakh. Then 31st January. No. Qualifying asset is complete. Your balance sheet date is on 31st of March. This is your balance sheet date. You should write timeline perfectly. Answers perfectly will fall. Now see here. Is it totally specific borrowing? I'm not interested for this because I already capitalized that here. E 2 lakhs la 1,50,000 is also, sorry, 50,000 is also specific borrowing. I don't have a problem. The remainder 1,50,000 is funded out of general borrowings. These are all funded out of general borrowings. Now, average expenditure on qualifying asset out of general borrowings alone I want. Specific I've already sorted myself. Okay. 1,50,000. When did you incur this, ma? 1st of August. From 1st August, count up to, this is your cutoff date, sir. Don't go beyond this, huh? Why? Asset completed. It's like 1,50,000 ka borrowing used in your project from here to here. So, August, September, October, November, December, January. How many months? 6 months into 6/12 plus 3,50,000 into October, November, December, January. 4/12 plus 1 lakh into 1/12. So do the math. 350,000 into 4/12 plus 75,000 plus 2 lakhs. This is step number 2, sir. Step number 3, borrowing cost capitalization. You're not getting 2 lakhs, huh? Check out once. You should get ideally. Number is also round only. Of course, no conclusive evidence, but anyway, try again. 75,000. 3,50,000 into 4/12. 1 lakh by 12. A perfect correct. 22,870. Here one more point. You should not suddenly become over smart and multiply with the 10/12 and all. Don't do that. Why? We already did that here. The counting happened up to which date? 31st January. The counting happened up to which date? 31st January. The counting also happened up to 31st January. Which means what? The expenditure is already factored only up to 31st January only. You should not apply into 10/12 and all. Here wrong answer will come. If you are getting confused now, sir, ditch the steps. Directly draw line. Sorry. Up to here, up to here, up to here. In that case, your fraction will be how you tell me? 1,50,000 into 11.4375% into 6/12. Here you will do 4/12. For this you will do 1/12. Again, that's the reason, again 10 by 12 and all you should not do. That's already done. 2 lakhs is factored only up to 31st of January only. Careful. Are you understanding, ma? That's all. So, total borrowing cost capitalized is equal to 15,000 specific, 22,875 general, 37,875. The correct final answer, sir. If you are confused, don't follow steps, directly go. But remember, this is your cutoff point. Here will happen cessation of borrowing cost capitalization. Once borrowing cost capitalization ceases, borrowing cost will enter into P&L account. Be careful with that. Do you understand, sir? Is it getting into your head? Question number 12. Understand, appreciate the difference between 11 and 12. Question number 11, the project is incomplete on 31st March. So up to, at the end of the year, up to December you counted. Here, project is complete on 31st January. So up to 10 months I wait maximum. Are you understanding, ma'am? Sure. By the way, in this question they asked a journal entry also for this entire thing. Write the entry, sir. Building account debit to bank to interest expense. I mean, presuming that this is correct only, actually. This is the best way of writing this. How much you spend? Count off first. 1 lakh 50 plus 2 lakhs plus 3 lakh 50,000 plus 1 lakh. Correct. You spent a total 8 lakh rupees. For the interest, you would have written interest to bank, some amount. But even though you paid so much interest, what is capitalized is only 37,875. So total 8 lakh 37,875. See, before this, I would have recorded one entry like this. Interest expense to bank with some amount. I entry need not write. Why? So who will count all the interest and all, sir? No, not required. No, that fellow is asking how much will you capitalize. I am interested only with what am I capitalizing. That's enough for me. Out of so much interest, this is getting capitalized. Remainder interest will go off to P&L account. That nobody asked you. You need not work out. If you ask, I'll work out. It's not required. Well, okay. I'll ask a question. Try to think over conceptually and answer. Think conceptually and try to answer this. Sir, I'm constructing an apartments. Big community, sir. 2,000 flats. Okay. I constructed first year, second year, third year. Now, my project is almost completed. Big towers I have raised. All these apartments are for sale only. They're held for sale. But last 3 years, what happened? First year, second year, third year. Whatever borrowing cost you incurred, that you capitalized. Here also capitalized. Here also capitalized. By the end of third year, sir, all the buildings are almost complete. What this fellow is doing, in each apartment, one door he is not fixing. In one apartment window he did not fix. In one apartment bathroom he did not finish. In one apartment tiles he did not put, rest all is over. And overall building a painting work is not over. But all the apartments are almost getting sold. Building is 98% completed. 2% work wantedly is keeping pending. You know why? Fellow is saying that, sir, painting not over, sir. Wall not fitted, sir. Door not fitted, sir. Unfinished washroom, sir. Why is he telling you all this? He's trying to prove that asset is not yet complete. by not spending or not, by not doing a minor work, that fellow is trying to come under the clause that asset is still incomplete. Fourth year also he wants to capitalize. Can people pull off this kind of trick or not? The standard says, I don't want 100% completion. If asset is substantially completed, if substantially all of the activities are done, enough. Don't capitalize. Language is substantially all the activities must be over. 100% must be completed, and nowhere in the standard it is there. Now we'll show the verbatim of this. Read the language here. Capitalization should be seized when language substantially all the activities are complete. Not 100%, substantially all. Almost if it is completed, that's enough. Stop capitalization. If I don't put that word substantially, that fellow will never finish it technically. Some of the others work he'll be keeping, and he will escaping the interest cost from P&L account, and he'll be keeping on adding to inventory. A risk is there. Are you understanding, sir? So this is one small point which I wanted to cover. Based on this only, study matter, one small question is there. Look at 14th one. H Limited incurred borrowing cost for the purpose of construction of a qualifying asset for its own use. The construction gets completed on 31st May 20X1. However, decoration work is under process, which is expected to be completed by November 20X1, after which H Limited will be able to start using the asset for its own usage. H Limited wants to capitalize the borrowing cost incurred up to November. So very clearly, the question says construction work is almost completed on 31st May. What is pending? Small decoration work is pending. Citing the decoration work, can you extend capitalization of borrowing cost by another 6 months? No. You have to cease capitalization. Next. So, for example, you are constructing a project like Wonderla. In Wonderla, what is there? There are various kinds of rides, various game themes, all this stuff are there. So, what you did is, first you bought one ride, one roller coaster you bought, installed it. Next, you bought one huge giant wheel kind of thing, you installed it. You brought one water sports thing that you installed it. Total 20 items should come. Till now, 4 items came. Now, for buying these 4 items, you borrowed money. On that, you are paying interest. The question is simple, sir. A interest cost can I capitalize? Indirectly, what am I asking? The rights what you already bought, are they qualifying asset? No. Think over carefully. Read the question. ABC Limited is in the process of getting an entertainment park constructed. For this purpose, it has taken loan from a bank. The said park consists of several rides and facilities, each of which can be used individually. Please underline that. That is going to be a crucial point in your answer. 3/4 of the park has been constructed and can be opened up for the public, while construction of the remaining part is continuing. Whether the capitalization of borrowing cost should continue for the whole park until construction continues. So easy, no? Some rides are ready. Our rides ka tickets you are selling. Public are coming and enjoying it. Another few rides are under construction. Once they are ready, you will allow that also. Time being, whatever is constructed, whatever is ready, they are capable of being used or not. So the moment it is 3/4 ready, you can cease capitalization on each asset the moment it is ready for individual usage. You need not wait for the entire 100% park to be completed. But if you tell me that, sir, there are 20 rides, 4 rides came, unless other 16 rides ka construction is completed, we won't sell a ticket. If 20 rides ki individual ticket is not there, somebody has to buy a blanket ticket outside and come inside. Whatever ride he want, he can enjoy. If that is that kind, see, the example is not that. The example is very clearly telling each ride is individually sold to the customer. My example is different. What am I trying to say? I'm having 20 rides. 4 are ready. 16 are not there. They are under construction. If 4 rides ka ticket I won't sell. All 20 must be there. Then only I will allow a person to come inside. In that case, even the 4 can be used individually, they are not ready for your intended usage. Your intended usage is to sell a ticket for the entire amusement park, not for one or two specific individual rides. Are you understanding, sir? In that case, you cannot capitalize. Sorry, you cannot cease capitalization. You have to continue capitalization till the entire park is ready. But in this example, it is not like that. The example is pretty clear. Park lo many rides are there. Each can be used individually. 3/4 of the park is over, and it can be opened for public even when construction of other part is continuing. Because he said so many things, individual facilities are capable of operating independently and are ready for their intended usage. Therefore, borrowing cost shall cease to be capitalized for the 3/4 part of the project. Do you get it, sir? So fine, this is about your question number 15. One more question we'll solve for today so that you'll remember these points. Easy one, difficult one, easy one, difficult one, easy one. Fourth one. Very easy one. Question number 3. Read through these 4 dates. Identify one date as commencement date. Excel Limited is commencing a new construction project which is to be financed by borrowings. The key dates are as follows. 15th May, loan interest relating to the project starts to be incurred. 2nd of June, site planning commences. 19th June, expenditure on project starts to be incurred. 18th July, construction work commences. See, they gave you in chronological order only, May, June, July, like that. So what is commencement date? It's a date when you can start capitalizing the borrowing cost. When can you do that? 3 conditions cumulatively must be satisfied. What are the 3 conditions? Number 1, borrowing cost must be incurred. That happened 15 May. But expenditure on qualifying asset also must be incurred. That happened on 19th of June. Work should be in progress. Activities should be in progress. When I say activities must be in progress, it need not be physical construction, no. Even technical site planning, obtaining permits, designing work, this is also okay. And that happened on which date? 2nd June. These 3 points are okay for me. Physical construction is not a criteria, ma'am. So all these 3 points are cumulatively satisfied on which date? 19th June. So 19th June is your commencement date. Are you understanding, sir? So, sir, do one small thing. Today's session is over. What you do? Go through the standard. Each and every point read. Whatever sums you have solved, please solve them again. Please solve them again. What I will do is, tomorrow's session, there is nothing to teach for you conceptually, sir. 1 or 2 small points are there, but 2-3 good questions are there. Once we do this, we are done with A16. We'll jump off to another standard. See you guys tomorrow.